Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 28, 2019. As usual, please hit the like button and subscribe to this channel. This channel exists because of your support. So again, stocks are approaching all-time highs. We'll look at Chinese shares that don't look too bad at all, despite all the trade war talk. Interesting example, I saw today Stratasys Systems, SSYS, wasn't trading it, but I'll show you how to read price action, basically. High yield bonds and next to the highs, and this is confirming the move higher. So far I don't see much changes, but I think that the inversion of the yield curve is not a great thing. And we'll look at copper and a little bit more in depth today, and as well as in gold. It's quite a bit of in-depth coverage today and several recent trades that are just looking great right this instant. Dollar index and euro trade flat for the week, but I think that there is a good possibility that dollar is turning around to the downside. And we'll look at oil, at what price level to short it, and we'll finish off with a crypto review, which is basically a trader's paradise right now. And in general, and I mean technical traders. So there is really not much of a fundamentals for cryptos. Alright, let's go to our stocks. And here they are, S&P 500, the main one we should worry about, basically. These are record highs just a few days ago, so yeah, there's all kinds of talk about the economy and all that stuff, but I think the most important thing is that the fact that these are record highs, and this means that investors are pretty much thinking that this is going to continue higher from here. Now, I personally like to see a deeper pullback before I initiate any new positions, but some people are okay with buying up here. So S&P 500, same thing, record highs. Dow Jones, or the QQQ. There is an alert to my subscribers recently, and again I want to point out that I'm using my own indicators for the for trading, basically. So my indicators are basically help me identify the trend and also when, at what levels to buy and to sell. So here is a great example of what happened in June, beginning of June of this year. So you can see record highs back here in April, and then we had a decent sized correction, actually a really nice correction. It ended exactly at the blue line, just as it did in March, and then we pushed higher from here. So again, this is an actual alert again on June 4th here. Overall bullish chart, we should continue looking for buying opportunities. We should not be looking for tapping patterns. Same goes for Dow Jones. These are brand new record highs just a few days ago. So this is all I need to know, but I want to know when to be buying, at what level. So the same thing goes here. Decent sized correction from the April into early June, and this is an actual alert right there on 29th of May, late May, early June. Let's look at China and the Chinese shares. So lots of news about various trade war and tariffs and all that stuff. So overall, yes, Chinese shares are under pressure. You can see actually a few months ago here in March, and then again here in April, I sent a couple of alerts to my subscribers. Overall, not successful right this instant, and you can see a push towards the bearish levels. Barely held on here into 24th of May. Now again, notice that the indicators are curving down. Again, you can find out more about the indicators, but the way I'm reading this price action, basically you can see the blue line is coming down towards the price action. So right now what this is telling me is the risk is reduced. So if I see a close above the blue line currently at 42.92, I think I will be looking to enter on the long side to be buying this. So yes, lots of talk about trade war, lots of scary news and all that, but the picture, the technical picture, actually doesn't look too bad right now. And another example of why it doesn't look too bad, so you can see that this is FXI, uh, the large cap Chinese shares, while this is ASHR. This is kind of like a more broad mainland Chinese shares representation. And you can see that whereas FXI was trading below the red line as early as May, we did not close below the red line for SHR, for mainland China. In fact, right now I see a breakout above the blue line right there, and we could potentially continue higher. What this is telling me is that I think the compromise of some sort will be found, and the trade talks will, resume, and then eventually a deal will be signed. What kind of deal? It's difficult to say, obviously, but the stock markets of China and the United States are, I think, betting that the compromise will be found. Here I wanted to give an example of a price action. So Stratasys. I was not following this stock, but I was following ARK Innovation, ARKK, and I saw this big move today, and I'm like, what is that moved this ETF? And I looked at the holdings of ARK Innovations, and it turns out the Stratasys is one of the biggest ones, and nice move today. Look at the size of this candle, plus 14% in just one day. So this is the way I trade. Again, I wasn't trading this particular stock, but if I was trading it, these are up arrows are where I would be sending actual alerts, and you can see that all I'm doing is I'm looking for a security which already has closed above the blue line, which is, for example, right there on the 29th of January, and now I'm seeing a pullback towards the blue line, and this is all I'm doing. I'm simply buying on close above the blue right there, maybe also here around April and around May. So all of those are great opportunities. Latest opportunities were just a few days ago, and then just skyrocketed. So overall, this is the essence of my system. I'm simply looking for a pullback towards the blue line, and I'm simply buying there. Again, you can find out more about these indicators at MasterChartsTrading.com. So an example for you to see how easy it is to trade. You really don't need to know anything about the stock. All you need to know is how to use the 4 lines I'm showing you here. Let's look at bonds. So junk bonds. Junk bonds are confirming this move higher. You can see a fresh high for the move here, versus the April highs here. This is a good news, and this is confirming that stocks are going to also continue higher, or at the very least that there is no major divergence between stocks and junk bonds. Junk bonds and stocks move in lockstep together. So if there is no divergence between junk bonds and stocks, I think we should continue thinking about stock market as bullish. Let's look at TLT and the various bonds, but let me just show you the yield curve once again, and the whole thing about the Federal Reserve not wanting to lower the short-term interest rate. So this is what I'm talking about, the yield curve inversion. You can see that currently the 3 months yield where I'm hovering is about 2 point some percent. But the point I'm trying to say is you can see that the yield curve for even 10-year bonds, rather yield for a 10-year bonds, is the same as the short-term yield. This is called yield curve inversion. It's not a normal state. The yield curve should look something like this, where the short-term yields are below the longer term ones. So currently it's not, it's sort of reversed. But it's not reversed all the way to the 30-year yield or the 20-year yield. So I think 20-year yield is still slightly above the current short-term yields. But as I keep showing a few, two examples in the past, here they are. This is occurred in April of 2007, before the crash that occurred a few weeks or a few months later. But you can see that the short-term yield was below the 30-year yield, and the similar pattern occurred back in 2000, where the short-term yield was below the 30-year yield. Again, so currently this is not what we have. We're still seeing short-term yield still is below the 30-year yield. Now, if TLT breaks higher, so right this instant, the 30-year yield, we can look it up, TYX. So TYX, and this number right there is the actual yield, so it's 2.53%. So it's about there. Still slightly above the short-term yields, but you can see that it's in a downtrend. It's been going down, down, down. I mean, we might see a bounce, but I think the overall bigger trend is down. So here's TLT, for example, again, and TLT is approaching record, or not record, but highs for the move, for this move that occurred, breakout that occurred back in December. You can see a fresh high for the move. Not a great sign once again. So if the yields will be continuously pushed down because bonds are gaining and they move opposite to one another, we may see an actual yield curve inversion, as I just showed back in the, for example, 2007. Perhaps the Federal Reserve will finally act next meeting. I'm surprised they didn't act this meeting, but I would have, I would have moved the interest rate lower so that there's no inversion of the yield curve. I'm not an economist, but I'm, looking at this chart and I'm worried, honestly, because it's getting there. So intermediate term yields, so 7 to 10, and like I showed, 7 to 10, they can move even lower, and then the yield curve inversion will get worse. And this is a bullish security, so I think it could easily continue higher from here. Even the short-term yields, or rather bonds BSV, also at next to record, well, highs for the move, and it could get worse here. Basically, the inversion could get worse. So I am a little concerned. Let's continue to some commodities I wanted to cover, namely copper. Let me just look at copper first. So here's copper. Now, this alert right there on the 7th of May, this is a short, worked out beautifully. You can see over 6%, 6.5% actually gain in our favor. If you trade futures, you realize that this is a huge gain. Right this instance, I am see how the lines are very wide here. You can see, for example, from here to the yellow line just a few months ago, like last month in May, the difference between the green and the yellow line was 16%. Now, if we look at the same parameter now, it's 10%. So this is called the narrowing of a trading range. And when that happens, we sometimes see a reversal. So what I'm looking for right this instant is whether I should be again shorting it, because this is the same thing as before. We had a breakdown, a bounce, and there is a great opportunity right there to just get short right there at the red line. And I wonder if I should be doing the same, or should I be waiting for the breakout? So to answer that question, I wanted to look at the copper miners ETF. So COPX is the ticker symbol. One of the few remaining bearish securities. There's the breakdown back in July of 2018, so almost a year back. And what I'm seeing now is this push towards the blue line. So once again, you can see the trading range has narrowed significantly. Look at this distance between the green and the yellow lines. Just in May, and now look at this distance right there. So a breakout above the blue line, which is currently at 21.86, will be bullish, and I wonder if this will be a sign for the turnaround in copper. Same general principle. Of course, within the copper industry, I think the biggest one is FreeportMcMoran, biggest copper miner, if I'm not mistaken. I think they also mine gold. But you can see that right this instance, it's still in a quite bearish phase, and I would still wait for a significant push higher towards 14.89 here, almost $15. If that happens, then we will know that copper is most likely breaking out. But right this instant, I'm not sure. So we'll basically sit and watch this chart. There's a lot of sitting and watching in trading, I tell you that much. So gold just made a nice move in our favor. So we are looking at over 12% gain on the EURUSD. If it's a leveraged trade, obviously you'll get bigger gain. The way I've been trading it is the same I've been showing constantly, same thing. A while back I stopped thinking once I got my indicators working fine. I'm talking about these indicators here, the green, blue, and red and yellow lines. There's the breakout right there on the 3rd of January 2019 of this year. And then from then on, I'm just looking for a pullback towards the blue line. So there's the pullback right there on the 8th of March. Successful trade. There's another opportunity, and I sent an alert. There's on the 7th of May. The latest alert was just beautiful. Hopefully, my subscribers got some nice money from this, because this is a business of trading, right? So we want to make money. We're not in this for academic purposes, although some people are. Now, so here is GLD. You can trade this gold, same thing basically. You can trade it on exchange, or you can trade this futures. I sent an alert for gold futures and gold itself, GLD. Nice 11% gain, so again, congratulations. I myself opened a position in GDX. So this one is obviously more volatile. Breakout occurred a little bit later here than gold itself in January of this year, late January. There is where I'm hovering, 28th of January. This is an actual alert as well. Here back on 31st of May, I wanted to show kind of like an anatomy of this trade and my thinking behind this trade. So here is the way I think and the way I open positions and the way I minimize losses, the way I basically do my trading. The best thing about the indicators is that you can just basically remove your brain, and this is again one of my favorite things in trading, is to think very little. It needs to be so obvious that a child can do this. In fact, I taught this stuff to my son and he understood it more or less. He's 8-year-old. So here is the breakout, or rather, here is an opportunity. Why is that an opportunity? Because we had a bullish security, because it's highs here and the breakout. The highs occurred here on the 20th of February. So whatever is pullback, we need to think about it as a buying opportunity. And where do we want to buy? We want to be buying, me personally, I want to be buying on a pullback towards the blue line. Now, here, why didn't I buy, right there on 26th of April? So, this is price action and also candlestick reading. Some people ignore candlesticks. Some people like candlesticks. The reason why I did not want to take this opportunity is I didn't like this candle. Even though it closed above the blue, which is my basic um, trigger for going long, for buying, still not really strong enough candle. Now, as we continued further, I'm just sitting and doing nothing. I had no position here. Then I can see a breakout right there, or rather a push higher, a gap right there from 30th of May into 31st of May. Nice big gap too. And then after the open, it continued higher. This is pure and simple bullish price pressure from the open into the close. Lots of bulls. Everybody wants to buy. So I decided to jump on the bandwagon, and this is what I did. I opened right there at 21.57. Next day, basically, it reached my target already. I already advanced my stop, and then it continued higher. I sold a quarter of my position right there on 11th of June, just to feel good. Again, you don't have to do it, but if you want to feel better, if for example you had many losses, you're not comfortable or whatever, I do it because I think it's a good idea to have something. I have seen many times, such a nice push higher, and everybody is so happy, and all of a sudden it collapses lower. So at least I have something in my pocket. I have a gain in my pocket. I have a profitable trade on my books. So as we continue higher, I sold another quarter right there a few days ago because I thought, maybe this is the top. Maybe this is a bearish engulfing. So far, it has not been bearish engulfing, but, I already sold 2 quarters, so half of my position, and I already advanced my stop far enough above my entry that it's basically impossible for me to lose. And you should be, as a trader, I mean, I know people love to concentrate on wins, but the reality is it's the losses that you should be really worried about. Especially like you had a winning position, and all of a sudden it turned into losing position. Feels terrible. Here again, as I just described my this trade, then you can't really lose. Basically, you just continuously advance the step, take profits. So this way, it will be very difficult for you to lose. Couple more examples. Here is again my position in Barrick Gold, symbol GOLD, Gold, Barrick Gold, big company. Right there I bought on the 7th of May. Same explanation. We had it's a bullish security because it already broke out, and those were new highs in March here. Now a pullback towards the blue line. I went ahead and I opened here and noticed that I had to sit in my position for a little while before it finally exploded higher. And I did the same thing. I sold a quarter again just to lock in the gains, advance my stop, and I can sleep peacefully at night. I have nothing to worry about. Here I just decided to take more profits because it looks so good. So again, I'm advancing my stop. I have profits on the table already, so I have basically I can sleep at night. And another opportunity for the subscribers, an actual alert again right there on the 31st of May, and it just immediately took off with a 16% gain. This is by the way, a dividend aristocrat, a Royal Gold, a dividend paying stock. So we trade these at MasterCharts Trading as well. Alright, let's continue to the dollar index. So here is DXY. If you listen to my previous video, I keep mentioning that I think the dollar is finally turning around. Now, here we're reading price action, so we have 1, 2, 3 outright bearish candles. We have strong selling, especially right there on the 21st of June, where the close was the same as the low. And now a sideways consolidation. Now, I don't, trade based on various chart patterns, but this one sometimes just jumps out at you. So this could be like a falling flag, maybe. A falling flag. I'm thinking that these 3 candles will be at least duplicated on the downside. If that happens, the most important thing is, I don't really use the patterns, but I use my indicators. So this is what we need to be watching for. Watch for a breakdown below 95.46 level. The same, but the opposite goes for euro versus US dollar. We need to be watching for a breakout. And it was the same thing. Several strong candles, sideways consolidation. Maybe this is a rising flag or a pennant or whatever. A breakout would take us to the bullish levels, which are currently at 1.15, and this would be a bullish breakout. Still hasn't happened yet, but the way gold has been acting, I think it could very soon. All right, briefly, let's look at oil now. This chart, I actually sent an alert here to my subscribers. This was a successful trade depending on where you entered. I personally would have entered around 55 bucks, and this would have been enough to make money. Right this instant, I don't have any positions, but notice this red candle finally after 1, 2, 3, 4, 5, 6, 7, 8 green days. My thinking is if it drops to 55.31 right there below the red line, then I would be shorting it. Nothing is happening to natural gas. It's in a bear market. Right, finally, let's look at the technical trader's paradise, which is cryptocurrencies. Why is it technical trader's paradise? Because there's very little fundamentals for various cryptos. Briefly, Litecoin broke out on 2nd of April. I mentioned it multiple times. Pullback towards the green line, towards the blue line. Notice how perfectly it just landed right on the blue line, right there in April, late April. This is an actual alert. Again, we went ahead and we opened the position, or whoever did, my subscribers did, over 100% gain. Now a normal looking pullback from the highs. So looks like Litecoin is leading the cryptos lower. So let's look at Bitcoin next. So Bitcoin, a little bit busy chart. I apologize. I wanted to show again my anatomy of this trade. One of my best trades of career, I tell you that much. The breakout again occurred there, right there on the 6th of May, and I went ahead and I just bought it. At 5,700 from Coinbase. A few days later, I sold a half of my position. Probably should have sold a quarter. And good thing I didn't get stopped out even by the spike here on the 17th of May. Notice I sat in this position for a while before it exploded higher. 137% up move. Sold another quarter right there yesterday on the 27th of June, so I have about a quarter of a position remaining. So let's look at this candlestick. I already sent this to my subscribers, but it's kind of interesting to examine this chart, candlestick pattern. So you can see a tail at the top right there on the 26th of June. In other words, sellers did not allow the bulls to continue pushing the prices higher, and they decided to stop it basically. Next day we had on 27th of June big candle. It was actually bigger before. It was like before the close was like up to down to here. I think this could be a bearish engulfing, but so far there's very little um, price pressure to the downside. So perhaps I, again was too early to sell some of my holdings. Overall, obviously a bullish chart. We should be looking for a pullback within this bigger uptrend to be buying it. Finally, Ethereum, an even more obvious bearish pattern. You can see a big spike higher, a rejection tail at the top of the candle. So the sellers rejected higher prices and strongly pushed the prices lower. Next day, sellers came in on full force and just collapsed the prices by significant margin here. Overall, still a bullish chart. So again, I would be looking for any buying opportunity for Ethereum. This should be around 258 right there. Alright, so please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. Click on the sign up and sign up for one of the services. So once again, if you just want the alerts, and the vast majority of my subscribers just want the alerts, then this is perfect service. It's only $24.95 or even less if you sign up yearly. With a 30-day free trial. If you're a trader on your own, you want to sit and trade by yourself, absolutely get the indicators, and I can get these indicators working on your machine on TradingView. So again, you need a free, no charge account on TradingView to view my indicators. Once you have signed up, I'll open the door for you. This costs $29.95 or $24.95 per year. And of course, the best deal is to get both alerts and indicators. So if you want to trade and you want to get my commentary, then obviously you want to have both. And it's a steal at this price, $45.95, because notice that you will need to pay well over $50 if you want to pay them separately. Okay, that's it for this week's recap. If you have any questions, please send them in. Again, I wanted to also show my social media links, and I'm on TradingView. You can click on help, and then there's social, and then I'm on TradingView, I'm on Twitter, on Facebook, and obviously on YouTube because you're watching this video, and I am on StockTwits. That's it for this week's recap. Thanks for watching. Have another great trading week. Bye bye.